making some, news, I guess you could say, but also from a layperson's terminology, a layperson's understanding. It's pretty interesting to follow these events. Now, it's almost worth at this point in time researching this and saving my research and possibly even putting a paper together just to see if my understanding is correct and submitting it to those peer-reviewed places, that you can, things like that you can do, which would be worth doing because then you sort of have that under your belt. Now, what I'm referring to is this here. I'm not sure if this is peer-reviewed. I'm not sure if you could use this in some sort of study of university degree. But we have here Harvard Law School Forum on Corporate Governance. Now, why crypto assets are not securities. Now, this is back in 2022, and what's worth noting is the past is just that, it is the past. So we need to deal with the updates because it's good to understand the past and previous positionings, footings, stances on cryptocurrency from places like the SEC, but it seems to be they're changing their footing and their positioning in real time. Now, currently we're seeing, for instance, the ongoing battle with the SEC and crypto as a whole, it seems, but it appears they're taking on larger players according to some articles. Now, previously, the Securities and Exchange Commission primary theory on whether a crypto asset is a security appears to be based upon whether the blockchain project associated with the cryptocurrency, with the crypto asset is at any point in time sufficiently decentralized. If so, the crypto asset is not a security. That's almost the previous definition now, because as we can see, I went to cited, noted. It basically refers back to 2018 speech given. Now, that was one of the articles I was covering the other day. Basically remarks to Yahoo Finance, all markets, some are crypto. That's where that actually comes from. Now, I'm not so sure that is the argument currently because if it goes on to explain, this theory was first proposed by the SEC staff 2018 to address ICOs, which are all the rage. That's people getting wrecked, and was followed by more detailed staff guides in 2019. But the theory has not aged well. It was impractical, if not impossible, to apply today's real-life blockchain projects. Is not supported by existing judicial precedent, which is kind of important if things are going to the courts. Now, the crypto famous Howey Supreme Court case, and has resulted in market distortions that harm both market participants and long-term innovation in the crypto industry. Now, I'm not going into that. This one, an intriguing new paper, the intellectual modality of securities laws, why fungible crypto assets are not securities, points us to the right path. Okay, number 4, let us have a look here. Discussion draft. Interesting. If this will load. I haven't read this one. It's not doxing me too hard. But yeah. How many pages is this? God damn, this is some good reading. Ooh. Alright, so I won't cover this one, but I will add that to my readings. This will definitely be worth looking at. Now, going back to what I initially was looking at before I read a few lines down and discovered some other interesting information that I stumbled across again. Let's go back to let's keep reading, eh? Now, we were up to here. The points us to the right path. The paper analyzes the relevant case law and concludes that there is scant legal basis to treat fungible crypto assets as securities. And it sets out an analytical approach that is far more satisfying. The paper separates capital raising transactions by blockchain project sponsors or other insiders in which crypto assets may be sold, which are typically security transactions, from the treatment of crypto asset, which is not a security. which is typically securities transactions from the treatment of the crypto asset, which is on security. This analytical framework addresses the now apparent challenges created by the SEC staff approach and appropriately focuses on the SEC regulatory jurisdiction on capital raising transactions. Now, the paper's approach is the right one and should be taken on by both the US Congress as it considers legislation to regulate crypto industry and by courts as they consider high stakes cases that hinge on securities law treatment crypto assets. Doing so would avoid the flaws of the SEC's well-intended but flawed current approach. And together with legislative initiatives to regulate crypto markets and intermediaries, it would better protect market participants and more responsibly support innovation. That's why I thought this paper is kind of interesting to read. I may post a link in the description. Now, the SEC's decentralized and morph approach we have in the wake and morph approach. I like the heading already. In the wake of 2014, either ICO and the following ICO boom. Now there's some notes there. The SEC staff provided the crypto industry with an analytical framework. So in the past, meant to clarify when and whether a crypto asset is a security. First, it set out in 2018 speech by SEC Corporate Finance Division Director William Hinman, and then described in more detail in 2019 staff guidance. Now let's have a look at that staff guidance. Right. Excuse me. Now we'll go open the link PDF. Page not found. That's probably because. Why is that? I probably pulled it. Hopefully someone's got a copy of that somewhere. Now, we can probably go back in the wave time machine, but where did it? Got it. Now, difference of decimal, we'll stop make now. Framework for investment contract analysis of digital assets. Let's have a look. Now, I may go through this. I may not. I'll continue on with this particular paper because I think it's worth a read. Now, the guidance number 6 we're up to. The core idea is that where a blockchain project is sufficiently decentralized, the crypto asset associated with the project will not be or represent an investment contract under the so-called Howey test named after the Supreme Court 1946 case, and therefore the crypto asset would not be a security. Now, too bad if SEC decides to morph and change on you later on, but anyway, as per their own thoughts, under the 2019 SEC staff guidance, the decentralization level of a project is to be determined based upon 50 or so factors that involve characteristics both intrinsic and extrinsic to the project. These factors range widely and include, for example, whether so-called active participants, which can include a promoter, sponsor, or third party, from time to time have a role in developing, marketing, improving, or operating the blockchain project. Whether an active participant owns or controls ownership of intellectual property rights, the network or digital asset directly or indirectly, and whether the crypto asset is transferable or traded on or through a secondary market or platform, or is expected to be in the future. What is that in reference to? ID. Okay. Now, did they leave out their reference? No. Okay. Anyway, that's unique. Number 7. Here we go. Again, if anyone's tuning in, maybe it's some pretty dull stuff, but I'll just have a look here in the chat. In bed, Dart, what is happening? We're all over the world. It's morning here as well, I'd say, but it must be really late in Finland, I'm assuming. But yeah. I'll continue on. Basically, yeah, just some interesting stuff. A normal, average individual will try and figure out by themselves what it is that the SEC is trying to achieve, or what they're trying to do. Is crypto, and how do I tell if cryptocurrency, as a retail consumer of crypto assets with no nefarious intent, who simply wants to have a brighter, better future, how can I tell if I am buying a security or not, as per the SEC's unclear guidance? Not that I live in or reside in the US, so it has no relevance to me because I can do whatever I want within reason. In regards to crypto, except for worry about just paying the bank's fees. I'm dealing with banks here, and maybe some crypto tax, but that's not too bad. But yeah, I'm really starting to feel for the people in the US who have to deal with this unclear guidance from the SEC. Now I'll continue on. I just will see if there's any. Don't think there's any chats in X, but I don't think it pulls up anyway. Alright, cool. Now that's working. I'll continue on. Where was I? These factors are meant to be evaluated at a particular point in time according to decentralization. Level of a blockchain project would be expected to change over time as a result of crypto assets could start its life as a security, for example, when it's first sold to investors by the project sponsors, and then at some point later it could morph into a non-security as the project becomes sufficiently decentralized. I think that's what took place in the the case in regards to Ripple Labs. Now, which I'll cover briefly after this. I didn't intend to read this entire article. I just picked out the part I wanted, but I thought, well, if I read it all in context, maybe it might help my learnings and understandings. Now, this morphing was, according to Mr. Hinman, what had happened in the case of Ether and Ethereum network, which had achieved the holy grail of sufficient decentralization at some unspecified time between the network's launch in 2015. Wow, 2015. How did I miss that? 2 years, okay. So, 1 year. Interesting. Now, at the time of his speech in 2018, Mr. Hinman did not reveal when. Okay, so they said that it had reached. This is old information though, because apparently SEC can just do what they want now. Achieved the holy grail of sufficient decentralization at some unspecified time between networks launch. So between the time of the launch and time of this particular speech from Mr. Hinman, based on this article, which was written in about 2022, it changed and was able to be. You see, this is how unclear this shit is going. I want to know, as a researcher, if a cryptocurrency is or is not a security. SEC is saying back in 2018, at some point in time between launch of a project and an unspecified amount of time, it then morphed into a non-security. And now, apparently, although there is articles out there floating around suggesting that Ethereum now is a security. Now, which one is it? Now, if that's not unclear guidance, I maybe I don't understand English properly. And I understand it. Okay. Now, classifying cryptocurrencies based on a project decentralization was a deft bureaucratic solution to a practical problem. It helpfully provided some reassurance that the two largest cryptocurrencies, Bitcoin and Ether, were not, or at least were no longer securities. Under the opposite law, the initial sales of these assets to the public could have violated registration and disclosure requirements for public security offerings. Just cue the interlude just for a brief second. around and back. On another note, my Batana oil arrived. Apparently, it's good for the hair. It is fatty acids make thin hair look thicker. It has phytosteroids and carotenoids, promote collagen elasticity, and vitamin E protects against UV damage, dryness, and split ends. So apparently, this is good for the hair. So I'm losing my hair, so I need all the help I can get. Now, I have some water, and I will continue. Now, where we at? Yeah, I had to run to the the office to pick up the parcel, and then back to the desk. Now I got to get back to my work, covering, trying to figure out what is actually going on with the SEC's guidance, because I found this pretty interesting paper, and I think I now understand their morphing approach, especially to Ethereum. It at some unknown point in time became at some unknown point in time, it literally morphed into a non-security. It's like when? No one fucking knows though. It's a mystery. I'll put my sponsored content right here, low, not quite, but that's another thing I've got to get to. As you can see, I still haven't fix my phone screen. Now, where was it up to? Oh, where was I? Oh, here. Did not reveal when. Now, goes on to say, classifying cryptocurrencies based on project decentralization was def. Yeah, we covered that. Reassurance that the two largest cryptocurrencies, Bitcoin and Ether, was not, or at least were no longer securities. Well, I'm pretty sure that Ethereum is now. That's not actually the case in terms of, a fork of it is being alleged that it is now a security, but whether or not it's the actual time of its inception, or whether or not it's the secondary market in which it trades, where it's a deemed a security, is pretty goddamn hard to tell, especially when you see in this article, you saw it morph from its, existence and being, deemed a security to becoming decentralized enough in which it's no longer a security. If that's not confusing, I'm not sure what is. Now, were not, or at least are no longer securities. So at some point, maybe even Bitcoin was deemed a security. Maybe, back in 2008, 9, when no one even knew what it was. But all of a sudden, it just, they decided to, anyway. Under this the opposite view, the initial sales of these assets to the public could have violated registration and disclosure requirements for public securities offerings, assuming, they're securities. And intermediaries such as cryptocurrency exchanges and dealers, as well as early investors in the tokens, could have been engaged in illegal unregistered securities exchange, brokerage, dealing, or underwriting activities. Now, this is what we're seeing now currently with the case between SEC and Coinbase, is my understanding. Given the billions of dollars of value transacted in these two tokens, the SEC staff approach avoided catastrophic consequences for holders of these crypto assets and firms providing services and building on related blockchains. Okay. Now, but in practice, outside of Bitcoin, Ethereum, and a few other blockchain projects, it has been almost impossible to apply the SEC staff guidance in a way that provides agreed on and repeatable answers. So that's kind of a problem if we just pause here. If you have a scientific proposal that you've created quantum infinite energy from 0 point, and you've put it into a battery, and you've built it and you want to sell it, it's like, okay, cool, build it again. Oh, we can't build it again, we can only build it once. It's like, hang on, if it's real and it does exactly what you said it would do, why can't you do it again? Oh, we don't know. That's kind of a hard thing to believe. Now, if someone's trying to tell me, well, you can't really tell you what you're looking for, it's like, where am I supposed to find this information then? and I'm not like I'm less some retail small individual trying to find this information, you know, trying to decide whether or not I should purchase, or if I want to have a risk tolerance to meet a specific threshold, which would make me decide to purchase a cryptocurrency. Because I'd like to know if I am purchasing something that is or isn't a goddamn security, deemed a security in the eyes of the US SEC. Because, you know, the US is a large market. And I'd like to know if everyone's going to evacuate the US and go live in, I don't know, El Salvador or something. Or Australia. Or some parts of Europe who are maybe more crypto friendly or are not deeming all cryptocurrencies borderline illegal. Although that's not quite what they're doing, but I'll get to that in a little bit. Now, market participants are expected to analyze a crypto. Yeah, I have a weird knack of doing that. It's literally the next thing they're talking about. So, market participants are expected to analyze a crypto asset and its underlying project under many vague factors. So, literally what I was just saying, some of which are based upon information not publicly available. So that's great, especially when, you know, the SEC can't provide guidance. The analysis is unwieldy at best and impossible at worst. Yeah, that's true. Now, particularly, why am I saying that weird today? Particularly, oh my god, I can't even say that word. I can like read it perfectly in my mind, but I can't say it. All right, I can't deal with my own brain today. Particular. See, I'm only okay with English. Lol.
Particularly.
I couldn't spit that out. God damn. Now. Where was I up to? Particularly without guidance on which factors might outweigh others, with little clarification through rules or substantive litigation. Adding further complexity, market participants are expected to evaluate the relevant facts and circumstances about a crypto asset on an ongoing basis, as a crypto asset that achieved non-security status at one point could nevertheless revert to a security status if the project's ecosystem becomes less decentralized, as per the previous, you know, definition of what is a security and not a security back in 2018, which is now apparently changing and morphing into something else because it is not clear that Ethereum has been named a non-security, as far as I'm understanding now, with current ongoing court cases and lack of guidance. Now, for blockchain project sponsors, the expectations created by the SEC staff guidance have distorted economic incentives in unhelpful ways. Blockchain projects often plan on token issuances in early stages of their development, both to jumpstart network effects and to meet investor expectations. Projects sooner than quickly find themselves in a race to decentralize, not based on the economic or particular practical characteristics of the project or its underlying technology, but oh my god, my mouth's not even moving, words are just like mumbling out, but instead based on the presumed need to address some number of the SEC's decentralized factors. The decentralization of a blockchain project often is a critically important goal, but the imperative to decentralize to achieve a particular regulatory outcome is a distraction that promotes short-term tactics, sometimes disparagingly been referred to as decentralization theater, at the expense of the long-term strategy. For goodness sake. And ultimately, this incentive is detrimental to the value creation and innovation of the crypto industry. The decentralization and morph theory seems to confound even the regulator who coined it. Fucking hell. The SEC has developed the theory inconsistently and sometimes confusingly in the enforcement context. In some instances, the SEC describes the crypto asset as a security. We'll have a look here. SEC versus Ripple. All right. And then in others, the crypto asset is described as being part of a securities transaction, whether or not the crypto asset itself a security. This inconsistency suggests the need for a better approach. Yes, it fucking does. Oh my god. Open a new tab. Pro tip. Now, this one here. Please open. Water time. Verify you are human. I already fucking did that. So it's just some fucking case law. It's an actual some document, sorry. And this is the so okay. So I'm not going to read that. Never ending. See, I'm simply trying to figure out, is cryptocurrency a security? What makes it a security? What makes it not a security? If I'm not from the US and I'm looking from Australia, for instance, looking into the US and what they are saying, it is very unclear, to say the least. Now, where is up to? I just check comments. So apparently Antarctica has no tax laws at all. It is like the only jurisdiction in the entire world. And it's non-existent tax laws. Where is it? Anyway, I'm not going to go there. Next thing we'll see businesses being set up in Antarctica. The fuck? It's like, wait, so you're telling me the largest banks in the world, the headquarters are all based in Antarctica? It's like, yeah, of course. What are you talking about? You know. Now, the next thing. With the benefits of a few's experience, it is clear that SEC is decentralized and morph theory is flawed. But then how should we think about the fundamental question of whether fungible crypto assets are securities? The intellectual modality paper shows us how, by starting with I like this. By starting with the basics and discussing key federal appetite discussions. Why don't I know what that word means?
Appellate.
Especially of court concerned with dealing with applicants for decisions to be reversed. Appellate. Okay, appellate court. That's why I don't know what it means. I never use that word. Now, decisions applying to the Howard test. Key federal appellate decision applying to the Howard test. Okay. The paper persuasively shows why ICOs and other capital raising transactions, which may well involve securities offerings, are distinct from the subject crypto assets themselves. In this intuitive step makes room for an analytical approach grounded in existing law that yields better incentives for crypto market participants and a path to better investor protection. How about that, SEC? Maybe you get your staff to review some of this. Here, I'll give you the link if anyone's watching this from the SEC. Or like being hoovered up into their data collection system. Now, it is this one here. Not this one. I think it's a book. This one here. The Intellectual Modality of Securities Law by Fungible Crypto Assets Are Not Securities. Discussion draft. Now, I'm glad I found this. What was it up to? A capital raising transaction where a blockchain project sponsor or other insider sells a crypto asset to finance development of the project likely involves an investment contract and thus a security. Investors purchasing from project sponsor would be participating in an investment scheme with an underlying of how sale proceeds were going to be used by the sponsor to increase the value of the crypto assets sold. This would be the case whether or not the project is decentralized at the time of transaction. But the crypto asset sold under the investment contract is never a security, no more than were the citrus groves in Howie. Instead, the contract or arrangement under which the project sponsor or insider sold the crypto asset, whether or not its terms are written in a single document, is the investment contract. Full stop. What's it trying to get at here? Let's have a look. Of course, even after the initial sale, a crypto asset can be sold in an investment contract transaction. For example, as part of a distribution by an insider or large holder who receives tokens under the initial investment contract, and other types of arrangements involving promises and commitments by a project sponsor or insider and token purchases can constitute investment contracts under a traditional Howey analysis. But that does not mean that the crypto asset itself ever is, becomes, or later stops being a security, as morphing would imply. Morphing, fucking Power Rangers. Can someone create the SEC Morphing Power Ranger token? Now, accordingly, the promises, claims, and inducements made by a project sponsor to a buyer that are the hallmark of an investment contract. Third-party trading of crypto assets anonymously on crypto exchanges would not be securities transactions. Pretty sure it still isn't, but we have to wait for what the Supreme Court. I'll get into that. Now, applying this approach to the Ether ICO yields the correct result. A court would likely have found the initial sale of Ether by project sponsors to the public in 2014 to be a securities transaction and subject to registration and disclosure requirements of the Securities Act of 1933. But subsequent anonymous trading of Ether, which is not a security on crypto exchanges or in a peer-to-peer transfers among third parties, should not involve securities transactions. Okay, this is getting interesting. This is similar to the end result contemplated by Mr. Hinman in his 2018 speech, but without the need for market participants to consistently assess whether, when, and how the Ethereum network later became decentralized enough for Ether to morph into a non-security, as it mentioned previously in the paper. So I guess it's worth pausing here, saying if it were to, take this different approach, the outcome would be that the court would likely find this initial sale of Ether by project sponsors to the public in 2014 to be a securities transaction, but subject to the registration disclosure requirements of the Securities Acts of 1933 applied to 2024. So if it was in breach of that, maybe there would be fines involved, and then I guess in a similar way to the XRP case, but then subsequent anonymous trading of Ether or XRP, we could interchange that, which is not a security on cryptocurrency exchanges or in a peer-to-peer transfers among third parties, should not involve securities transactions. Now, the next question that raises in my mind is how the fuck Coinbase and exchanges are then being told that they're trading these illegal securities after the XRP case, which said that, the subsequent anonymous trading of it on exchanges peer-to-peer is not securities transactions. But anyway, that's not the thing I'll get to. And that's not what the paper says. I'm just reading off the paper here now. The paper's approach does not require new or confusing legal theories. It avoids the impracticalities of an asset changing its status as a security over time based on extrinsic or non-public events, which would require market participants to constantly reassess the regulatory status of a crypto asset based upon factors as they may not be able to ascertain. For example, I could think of one: is something decentralized? Like, how many nodes is decentralized? If you have 1 million nodes but it's in one room, is that decentralized? You could argue it is. You could also argue it isn't. What if it's one server operating 1 million different nodes, but it's 1 million different random people? Oh, what happens then? Huh? Now, it would appropriately capture capital raising activities by blockchain project insiders, even where a blockchain is arguably decentralized. It also appropriately allocates regulatory responsibility for those capital raising activities to the SEC while avoiding subjecting all dealings in crypto assets to laws that were not designed to regulate commercial activities not involving securities. And we almost made it to the end. God damn, that was a long read, but it was good. This does not mean that marketplace transactions in crypto assets cannot or should not be regulated. FTX demise is yet another demonstration of why they should be. Although they were fucking criminals that were actually charged. So anyway, instead it means only that secondary market trading in cryptocurrencies, crypto assets, should not be regulated by existing security laws, which I 100% agree. Because as a participant in the secondary market trading in crypto assets worldwide, potentially, I do not want to be regulated by one jurisdiction. I don't think I would be, but I do not want to be affected by one jurisdiction. Period. Instead, regulatory gaps should be closed by new law. The authors of the paper call for Congress to address these gaps through legislation to give commodity futures trading commissions with authority to regulate crypto markets and intermediaries operating in them. So the CFTC, they're pro-CFTC as opposed to pro-SEC, as we covered previously. There seemed to be a battle going on in regards to futures, Ether futures. Now, indeed, several bills contemplating this type of regulation have been introduced into Congress in the past year. I'm not sure where that's currently sitting now. Would have to check. Again, not a crypto lawyer here, so would need some help with that. In the meantime, you stop alerts. In the meantime, courts and litigants working through the fundamental question of, oh my god, I want to cover that next, but it's not to do with crypto as such. Now, securities laws should take note of this paper and briefs arguing to apply the approach. The appeal of demystifying the legal classification of crypto assets without new and muddled theories is clear. It provides more elegant outcome for many of the pending cases that hinge on whether crypto assets transactions involve investment contract by treating fundraising activities appropriately as being subject to federal securities law without harming crypto assets market and investor value. Okay, but at the same time, it's like, I don't know, do I agree with that? That every time anyone creates a cryptocurrency, basically they're going to get tore in your asshole and get fined up the wazoo by the sounds of it, assuming it's not like a complete scam, in which case they may, the criminals will never get caught and they just run off with your money. But who cares about that, right? We got to worry about the people following the law. This is my frustration. But I'll go back to the comments just briefly. You gave me dude, I'm not sure of the anyway. Yeah. You just gave me an idea, set up a PO box for relay service. Ungovernable Antarctica, the place to be, That's the new slogan for come visit Antarctica. The SEC is trying to morph all of us in crypto into the to the boy house. I don't think they are. Whoa. What if the SEC is trying to go after, as they potentially laid out in this paper, not the SEC, but this paper, it's the logical argument I kind of agree with, although I disagree with how are you supposed to launch a cryptocurrency then? Well, you could just fucking launch it and not have any anyway. I won't go there because that would sound as if basically anytime you create cryptocurrency, someone says like sends any money anywhere, it's like some fundraising event, and that is the the breach of the securities law. But then once the token comes to an existence, reminds you of EOS, for example, there was fines. It reminds you of XRP. Now there is fines, and then the token itself is left alone. But now the SEC has gone a step further and is trying to, like you said, morph all of us into the poorhouse because they then want to stop exchanges from existing. So how are we supposed to access the tokens to be able to sell them if you're within the US? That is, because if you're outside, if you're in Antarctica, for instance, and you have a node running in Antarctica, you make some mad cash with the penguins, Fucking hell. All right, I didn't mean to cover all of that. But I think it was worth a read. Now, like I said, I'm going to go look at this. I might make another stream where I basically read all of this. Maybe not. I want to read that though. But what I meant to do is this. Now, I meant to just basically cover Bitcoin ETFs because I'm trying to understand, as a person doesn't know anything, what is a Bitcoin ETF? Funnily enough, Investopedia has a small article on it, because this stuff I think will be in universities in the future, and if you want to specialize in cryptocurrencies, maybe they'll have some digital asset course you take if you want to learn about it. It'll be, or maybe you'll be the one creating the content because no one else knows. No one else says this is like literally new. This is less than a year old. Now, Bitcoin ETF's less than 2 months old, I think. Our Bitcoin spot ETF was relatively new, having been approved SEC in 2024, exposing investors to Bitcoin price moves in their regular brokerage accounts. It invests directly in Bitcoins as the underlying asset. So that's the price that it tracks. I'm not sure which feed it's chasing, but that's what it does. I'm not sure how much of a lag there is as well. Like if you're trading on, we saw the different prices because they're broken down into units, it appears, but so you'd have to price it down and make sure your unit price is equal to the price feed you're looking at, and hope that you know what you're doing, because, you know, I would imagine somewhere there could be some arbitrage opportunities with not the spread, the price movements. So if the price of Bitcoin is lower, then you would be able to buy some cheaper Bitcoin, maybe in the physical market. Or if the price of the ETF is lower than the physical, maybe you can buy the. If you don't get chewed up by fees, you could buy the ETF and then sell it for a profit. Then, you know, vice versa. There's also hedging, etc. I don't know. You could delve in. Options potentially could exist. I'm not sure if they do actually. Bitcoin options. They may already exist, which would be extremely interesting. And I'll plonk this here. Basically, how do you buy and sell Bitcoin options? Understand the basics, European versus American. Okay, so they already exist, low. And they have links. Okay. Now, I'm going to delve into that. But the next thing I was looking at, because this is currently taking place, and I saw on Twitter, Elon's X, that there is an ongoing update where Coinbase is locking horns in the US court over crypto securities. And let's see if there's any updates. Don't think there is. Sometimes there's some good stuff that appears in my feed. Brief look. No, there's not. There's just the interesting ceremonies going on in the WEF. Yeah. Now, this one here, I highlighted some sections I want to look at. Basically here, I think the paper wrote it really well, although it does come to a conclusion that I'm not 100% in agreement with, but logically it does make a lot of sense if you look at it through that lens in which it was presented. I haven't read the other article, which it sounds like it is worth a read, which came to that logical outcome, by which the judge almost applied to the XRP case, if you ask me. Now, I'm not sure if they read that, I'm not sure. But if this part here we'll add this on to what we already read. Now, the SEC sued Coinbase in June, saying the firm stood this is my frustrations also. I'm not understanding why. The SEC is saying Coinbase is trading 13 crypto tokens, including Solana, Cardano, and Polygon, saying they are should have been registered as securities. Is it that they are trading Solana, Cardano, Polygon as should have been registered, and they should have been registered in the same way that XRP got treated, and that is their issue, their qualms with Coinbase allowing that to take place? Or is it because the ongoing trading of the token in the secondary market with peer-to-peer anonymous individuals, well, how do they word that? They worded it as marketplace transactions in crypto assets cannot or should not be regulated. Marketplace in crypto transactions this does not mean marketplace transactions in crypto assets cannot or should not be regulated. No, not that. Where the fuck was it? Basically, the XRP case said, I'm trying to find the word, it's important to get the words right. It's also important to highlight correctly. Okay. Events. Say it would avoid appropriately capturing, arguably, even where it's arguably decentralized, it also appropriately allocates regulatory responsibilities, capital raisings, while avoiding subjecting all dealings in crypto assets to laws that were not designed to regulate commercial activities not involving securities. So I think there's a good way of looking at this here, saying, hang on, what the fuck are you talking about, SEC? I want some clear guidance. Are you saying that Coinbase listed unregistered securities at the point of its inception and that's why you need to pay us money? Or are you saying that the Solana, Cardano, Polygon, and the other tokens that are not mentioned here are securities and are being, subject to, you're claiming they should be subject to legislation, or no, you're claiming that should be subject to regulatory requirements not meant for it. Is that right? I'm trying to think. While avoiding, so you're trying to, treat a crypto asset to a regulatory requirement, although it's not a security. Probably a good way of saying it. Now, and that is interesting because on that grounds, it sounds like SEC may have a case for a fine, may have a case for pursuing them to say, if we go, but then it's like, hang on. So if we, the SEC, say this new token coming out, is now subject, as in that previous paper, once it's created, you then need to register likewise. But then after you've registered and the token's issued now in the wild, it's no longer subject to this monitoring, unless maybe they actually rug pull and actually commit crimes, and maybe that's different, or they're involved in actual crimes like they claim, although the amount of that is actually relatively low compared to the cash, but not the point of the stream. So that is interesting. I do wonder, and I would, yeah, if I was Coinbase, I'd be like, no, fuck you. Why are you trying to make me pay all this money? You've just come out of the woodwork. You've come out of nowhere, and then now you're claiming that this new approach, and try to set this approach in motion. So this approach is like the way to go forward. Maybe they're trying to achieve this particular what this paper presents, and they're trying to make they've kind of set the precedent already that the XRP case, where initially when they were selling it to hedge funds, that was the breach, that was the issue. That is why we are coming after you, because we think that's where the breach took place. However, once the tokens were issued and the trading commences on centralized, decentralized exchanges, we have no issues with that, because that is no longer a security as deemed in that particular case. And also not parrots, but is closely aligned to what this paper reads. And also, I would imagine they're pulling that from this actual, they're citing it. So yeah, very interesting stuff. Now I've just probably confused myself a little bit there and destroyed the flow of the stream. So I'm just gonna have a little break, drink some water, play some Machiavelli. Thank you. I need to clip out the part where I was rambling on in a circle and just what I said before that. That made sense, I think. Logically, in an unbiased nature, as a third person observing what the fuck is going on. I'm still frustrated at SEC's unclear guidance. And now for them to come after every exchange under the sun, and whether or not they're actually saying that sorry, I'm drinking a lot of water. because they're trying to say they're unregistered, so that's why they breached, or is it that they're trying to shut the entire exchange down, or not operate on US territory? I'm not sure what they're going after. Doesn't make sense for them to be like, no, you can't operate under US territory, because I'd imagine they have a large shareholding, a large customer base, given the metrics of the US compared to other countries. So I'm more inclined to think SEC wants money through fines, settlement, I don't know. But it sounds like they will assuming they don't come out and the ruling says, Solana, Cardano, and Polygon are actual securities in the secondary markets. Retail investors, if you touch them, they're securities, and that's illegal. That could be a huge problem for crypto. But I don't think that's what they're going after, to be honest. Now, I think the other paper covered this better. US Supreme Court case to determine if an investment product constitutes as a security. A key test is whether people are contracting to invest in a common enterprise with the expectation of profit. Again, I think that is more relevant to its inception, when the initial token is issued, basically saying, we think at this point in time a securities violation took place because there was a capital raising event of some sort. Basically, is my assumption, is my understanding. Now, do not meet that definition of investment contract, the position held by the vast majority of crypto industry. Again, there's two different things going on at the same time here, I think. Now, the more I stop and really read this out loud and just stream to you guys, I really think that they're saying it's being confused. Two things are being confused. If using the Ripple case as the starting point, overlaying that paper we just read, explaining how, the morphing effect is kind of retarded, doesn't make logical sense because it's not open to interpretation, but extremely vague if the thing is decentralized enough, it's not a security. They've actually backtracked, and I'm pretty sure I've seen somewhere saying that only Bitcoin is not a security, and I think I have some explanations as to why. Then you could look at Bitcoin's inception and the running of EXE, but I haven't thought that through just yet. I'll focus on this. Basically, they're saying do not meet definition of investment contract position as held by the vast majority of crypto industry. I agree. Although I can understand the argument the SEC is making at the point of inception, when cryptos are not being offered to the public, but they're being brought about. And if there's large sums of money involved, I think that's flagging these three-letter agencies as well to pay attention, because they can't just turn a blind eye to, say, relative to an individual large sums of money. Especially if people, I'm not sure how it works, but maybe there's people that are trying to act as whistleblowers, saying, oh, look over here, there's some bad shit happening, and they're like, okay, what is happening now? Because I don't think they can ignore reports of that. Like if you're in the workplace and something's brought to your attention, you can't just go, no, I can't pay attention. So you have to now investigate that, I would imagine. Now, yeah, I really like that paper. That paper was good. Now it adds to this paper and these articles. The judge told SEC attorneys that she was concerned. Stillfeller told SEC attorneys that she was concerned that the agency was asking her to broaden the definition of what constitutes a security. So that's an interesting approach. If the SEC is trying to, basically it's like, here's the border, but we're going to place this one thing outside that border. Is that ours now? It's like, hang on. If you do it for one thing, what if you start doing it for everything? And next thing, you've got an expansive border. The SEC, then we have here, even on secondary markets such as Coinbase's platforms, we're purchasing the tokens as investments akin to stocks, shares, or bonds. Now, I fucking strongly disagree with this point. I'm not sure if the SEC is trying to get court clarity on the secondary markets, because my understanding was in the XRP case, maybe they're appealing, I don't know, SEC that is, that secondary markets are basically deemed not at all in any way, shape or form a security, and thus you're able to trade freely in the US, that is, because you can do it anyway. The code's not going to stop regardless. Regardless of what particular token we're looking at, because it's not just one, Ethereum we're looking at here. It's every single thing under the sun, as far as I'm concerned. Now, I don't agree with the SEC's position here. Even on secondary markets, that's a bunch of bullshit. Yeah, and then Coinbase lawyers disagreed. Like, no surprise there, because I think all of crypto would disagree with that particular position. I'd hope they would fall back on the XRP ruling for clarity there, or they make some new ruling where they're saying, I don't know. I honestly don't know. I actually think it's going to go the way of, in cases, I'm not sure about exchanges, but I think in products, finished products as well, I actually think it's going to fall more in line with what the paper cited, in that it would make more sense that, fines would be issued because of breaches at initial inception, but then beyond that, the tokens are no longer securities. But if they're trying to say that now, it's XRP I'm talking about here, if that's not a security in the secondary market, but now if we go after the exchanges and say the exchanges are facilitating this trade of securities, which they're not, because it was just deemed not a security as per the ruling of XRP, as I keep saying, if the exchanges now are being attacked and being told that they're facilitating, so XRP, are they saying if XRP appears on a centralized exchange, are they saying that's security, or are they saying no, XRP is okay, Bitcoin's okay because that's had court clarity? Is that what we have to go through here? Is this the process? Because that would mean then, if I'm understanding that process correctly, that would mean then every single cryptocurrency that you see on the coin ranking market caps from 1 to the end of time would have to go through this process. And if unless it was an airdrop, a free airdrop, then, or even unless it was a free airdrop, or unless it was even what, you mint your own tokens, for instance, like Bitcoin, then they would be called a security. And there would be a lot of legal work for SEC, a lot of cases, a lot of fines. Maybe that's what they're going after, under the guise of keeping everyone safe, which you can understand, but I don't agree. I disagree strongly with that approach. But that's that approach that I just said, because I think that could be not far from what will take place now. Just through my brief research I've done here last couple of days, I've been thinking about it a little bit, especially being in the the Pulse chain ecosphere. There's some SEC stuff going on. I have no idea what's going on, but you can follow the case, and I followed vaguely the XRP rulings, and now I'm seeing the Coinbase rulings, and that was the point of this stream. But then also I came to this other enlightenment, which is kind of cool. I think it's correct, But again, this is relative to the US, and I'm not in the US, so I just hope you guys in the US, you appear to have some strong legal firms to be able to combat some almost overreach of power by the SEC, in my opinion, whilst trying to gain regulatory clarity. And it's almost like they're going to the courts to seek this regulatory clarity. And it's not like they're going to be like, oh, we just want the minimum. They're going to try and power grab as much as they can. If they grab and they are granted it, then they will fucking keep it. But if they try to go after as much as they can, and even if they get just a tiny little bit of clarity, because I don't know if it's because they don't want to issue the clarity, or they don't know, or like they want to go all the way to like as it said before, it's not generally accepted that, this is my opinion, it's not generally accepted that the law is issued by the SEC itself, although they provide guidance and they get their guidance from the law. But it's usually many experts, it's stated here in this article, many experts rely on US Supreme Court case to determine if an investment product constitutes a security, because, you know, I think I had it here. I had to just double check where is it? Because I'm not familiar with the US. I know Australia has the High Court. I guess the equivalent of the High Court in the US is the Supreme Court, and the Supreme Court is the highest court in the federal system. The US Supreme Court has the authority to review decisions from the courts of appeals, and it's the final arbiter of matters of federal law and constitutional interpretation. So it goes something like US District Courts, US Courts of Appeals, Circuit Courts, and then Supreme Court. So I did know that. So that makes sense. Supreme Court is the highest court. What they say goes. Yeah. Now, so that was that. Next thing. Well, I've said this case about 20 times. I think we've covered it sufficiently. Basically, holding Ripple's sales XRP through secondary trading protocols did not constitute securities transactions, while direct sales to institutions did. Again, is SEC trying to say Coinbase is facilitating securities transactions in the secondary trading platform? In which case, I strongly disagree with the SEC's approach. Or are they saying when XRP was lit? I don't even know what the argument is. Or are they saying because Coinbase is facilitating the trading of XRP, even though the XRP is not a security currently, at one point in time when it was issued, it was a security, and that's why Coinbase is in breach, and that's why Coinbase has to pay fines? You know, is that the approach that the SEC is taking? May well could be, because like I said, I think there's a couple of things going on here that's being slightly confused. Now, we then had a look at ETFs, are a convenient way to get into crypto exposure. One thing that I noticed, there's fees. I mean, there's fees for trading on Bitcoin blockchain itself. And the question you have to ask yourself, I would imagine, would be, ETF fees, are there fees on top of the Bitcoin fees, or are the fees for the ETF cheaper? Because, you know, I could imagine, now this is my just little conspiracy here, but if you have, you know, over 10,000, whatever amount, say BlackRock has, and you have it sitting wherever they have it sitting, I don't know. I hope they've got it secure, because God forbid that gets hacked. That would just make a mockery of the ETFs. But imagine you have all your Bitcoin, right, just sitting in one place, and then you have the blockchain ledger. But then external to that, you actually have another ledger, and that ledger is to keep like the stock exchange brokers have their own ledger, I guess you could call it, a computer system to keep track of records. BlackRock would have their own internal systems, and you see, you know, one ETF unit is purchased by person A, then one is purchased by person B, then one is sold by person A, and then one is sold by B. How much Bitcoin has physically moved in the system? If anyone could actually locate, this would be an interesting challenge. Can we locate their wallets and see what they're doing on chain? Will in a annual report, a company like BlackRock print and give out their addresses? Because I would really, as an investor, I would really like to know what wallets, and can I see the amount of physical proof of holdership of the asset is what I want to see. So I'll be looking for that in BlackRock's annual reports in relation to Bitcoin ETFs. That's just something I just thought of just then. Actually, need to remember to do that. Now, I better write that down. Otherwise, I will forget. Now, what am I doing? I am looking for BlackRock specifically, Larry Finks, BTC wallets, because I want to know in their annual reports. I have no idea. I want to remind myself this. Because how do I know you've got the Bitcoin, BlackRock? I really want to know. I'm not saying they don't. I'm just saying a curiosity. Imagine in a financial statement they say, "Here's our wallet address. Here's how much Bitcoin. Go check on chain." Because that's a true crypto checking on chain, as opposed to ETFs, which are basically a mockery of crypto. It's a BTC ETF. Sorry, that's the accountant brain in me. The next thing here is what makes a crypto asset a security in the US, 2023, July 15. We covered this extensively. Partial victory, claiming, then since what is, this is an interesting part. What has the SEC been alleging? Now, regulators brought more than 100 enforcement actions against crypto companies, claiming digital assets as securities. Now, again, two things. Are they claiming they are securities from inception, or are they claiming that in the secondary market they're securities? Now, they say the SEC has been vague and inconsistent and have called for new regulation or laws. Fucking clarity, yes, I agree with that. I disagree with the SEC's approach because, like I said, are they going to be going after under the current approach, it appears as if they're going to be going after every single project under the sun. Now, I think possibly this is why we're seeing other streamers come out, like other founders, realizing that an attack on one particular cryptocurrency is going to lead to an attack on the next one, and the next one, and the next one. Maybe they have a list, and it's coming from CoinMarketCap, for example, and they're just going through and be like, okay, this one, next. Who knows, you know, right? Who knows? And unless you were an airdrop, unless you were you just mint your own token, mine your own tokens from nowhere, you know, maybe, just maybe, and you might have some issues with the SEC and how you came to be, similar to EOS, similar to XRP, as we've seen. Now, that is about it, because now we've come full circle. We're back to this wonderful paper. I say that honestly, that was a good paper. I really enjoyed that thoroughly. The Harvard Law School Forum on corporate governance. All right, I'll sign out here. Thank you guys for tuning in. Thank you for commenting as well, because I can now figure out where these comments are actually coming from. I don't think anyone commented on Elon's X. Just double check that, but if not, I will close out here. Couple of likes, thank you, Elon's X side. If I click on here, and God bless you all. Infowar 13, aka Free Speech, signing out. All right, peace.